Hello, everyone. Pat Smita here with your Tuesday, April the 2nd interest rate update. Uh, there were three key pieces of information that came out today. First one was the ADP Private Payroll change. This comes out from ADP. They're the biggest payroll processing company in the U.S. And they said that compared to the previous month, payrolls rose by almost 70,000, which is very healthy. But what it doesn't take into account are the government layoffs, because those didn't really start to the latter end of the month. And what we also saw was adjustments that were coming online. So the market was initially really displeased with this, but eventually it did calm down, as we will see here shortly. The big piece of information that came out later on was that on April the 1st, the Atlanta Fed gave its updated GDP Now update, and GDP growth was revised lower from 1.8% to negative 1.8% to negative 3.7%. Now, that's very important because we keep seeing growth go lower and lower and lower in anticipation of the tariffs that are coming into view. At the same time, the gold adjusted GDP went from a 0.2% growth to a negative 1.4% growth. This is important because the Fed will have to act to keep the economy moving along. The best way for them to do that will be to cut interest rates. If they cut interest rates, you're going to see more people buying and refinancing. At the same time, we did see that President Trump, toward the end of the day, imposed higher than expected tariffs. He's going to create a 10% across the board base tariffs for everything being imported into the United States. At the same time, certain countries are going to be increased with their tariffs. So, for example, China's going to get an additional 34%. U.S. is going to get, the European Union is going to get 20%, and Vietnam and Taiwan are going to get 46% and 32% respectively. Just so you see, the additional 20% that's being added on means that goods from China are now going to be tariffed at 54%, which is huge. Now, what we did see was all throughout the day, the market was not very happy because of the ADP payroll results. But toward the end of the day, what we saw was it did calm down to roughly where the rates were yesterday. So we didn't see much of a rate change, as you see right here, even though we went higher and lower. For the day, it didn't really move, and everything's going to be really set up for tomorrow. At the same time, we saw that on the 10-year bond yield, where it was moving up and down, but toward the end of the day, with the tariff announcement, it moved into new levels, and tomorrow should really see some good rates. If you like what you see, please follow us, like the video, comment, and share with your partners.